Hey guys, welcome back to another video here at Stain Trading. My name is Marnie Stain. I'm the founder of Stain Trading. I have been trading for over a decade. I only trade gold. All my strategies are specifically geared towards gold. But tonight's video, I want to focus on a lot size calculators, why you should use them, why they're important in trading, and how to use them properly. I think it is an indicator that is very rarely taught, and I think it is really undervalued in the trading arena. Although it is one of the most important things that you should learn with trading. So tonight I'm going to show you, how to read the instruments, because you need to understand your instruments in order to understand how your indicator works. If I do look off my screen, it means that I'm looking at my big screen in front of me here, just to explain everything to you and make sure that you understand how everything works. So I apologize if I keep looking away, but that's just on my other screen. So I'm going to be showing you guys my lot size calculator that I use in TradingView. So here it is. It's an everyday trading lot size calculator. It's not something special. It is something that I have downloaded from TradingView. It is an easy calculator. I'm using the lot size calculator USD. I think if you go to the indicators tab, you'll see it here in my. It's the lot size by Melodish Fish. Okay, so it's a very easy, straightforward, and simple calculator. And then it's very, very important for you to have a lot size calculator and understand how it works. You can obviously go and use my FX book and all the different types of um, lot size calculators. You also get ones that you plug into MetaTrader 4 and 5. Most of my trades I monitor on TradingView. The rest of my trades I manage on my MetaTrader. So I'll just put in my stop loss, my take profit, and where I take the trade on MetaTrader. But most of my stuff I do on TradingView, and that is why I like to use this specific lot size. So let me close out this trade to show you guys how it works. So what you're going to do is, the moment that you are going to be taking a trade, you are going to open up your indicator and you are going to click on the lot size calculator. Now, the moment that you click on it the first time, it's going to say to you select. Here you'll see at the bottom, it says select entry level on chart. Now, obviously, I've already set out this was the trade that we took. There is it. And then where is my stop loss? And then I will throw in my stop loss. All my strategies are a 1 to 2.4 risk to reward ratio. It means that I'm risking 1 to gain 2.4. Now you'll see it will just bring in a basic lot size calculator here. You'll see that it drew like a little bit of a blue target here, but now you need to input the settings of your specific trade that you're about to take. You're doing this before you even have pressed the buy button, right? Or this shorts or long. Before you press buy or sell, you're first going to do this. You need to know how to use a lot size. After I've shown you how this one works, I will then take you through what is important to understand with a lot size calculator and how to use it. I want to start off by teaching you guys how to use this thing properly. So you're going to then go onto your settings, and the first thing you're going to do is you're going to choose your base currency. So you're going to choose a currency. Unfortunately, if you're trading in rands and stuff, I don't know why you are, because there's just too many exchanges. But USD, and then this is very important to understand, units per lot. Now this is where a lot of people get very, very confused when they are using a lot size indicator, because they don't understand what is the units that they are buying per lot size. Let me give an example. If you are buying Euro USD, the standard lot size will be 100,000 units per lot size. So if you are putting one lot in, it means that you've bought 100,000, sorry, of that specific instrument. If you put in 0.01, then you have bought 10,000. If you put in 0.01, you have bought 1,000. So you keep taking a zero away. That's how you understand how much units you are buying per lot. Now you understand why we need leverage in trading, because to buy 100,000 lots of a specific currency is a lot, and that's why we have leverage. So that is an important thing to understand. Now, where people get very confused is when they move away from regular currencies like Euro, USD, USD GBP, EUR. The moment that you move away from those basic currencies and going into something like metals, like gold, then you are working on a different lot size. Now, where you will find this information is in your MetaTrader. I will show this to you just now, where you can find how much units per lot size you are buying. But a standard, you can go and get a standard list. There's a lot of things you can download. I'll see if I have one with me. You can download and you can see now with gold, our standard contract size per unit. When we buy 100. So it means that if I'm putting in one lot size, it means that I'm buying 100 ounces of gold. Yeah, I think that's correct. Yes. So it means that that's the minimum or the lot size. So for every lot, I buy 100. Okay. If it's Euro USD, for every one lot size, I'm buying 100,000. So to give you guys gold, if I'm buying zero point 0.1, it means that I'm buying 10. If it's 0.01, then I'm buying one unit per lot. That's why gold is such a dangerous currency to trade, especially if you do not know what you're doing, because the price is extremely volatile. It can move very quickly, and because the digits move very fast, money tends to fluctuate very, very fast. But don't stress, I'm going to explain to you now how much dollars you are risking now per lot size. I think that's also important. But first, we're going to understand the lot size calculator. So if you're working on currencies like Euro JPYs, your JPYs as well has a different unit per lot size. Okay, but because I specialize only in gold, I'm going to be focusing on gold for you guys today. So in gold, you're going to put 100. Now you're going to put the size of your account. Now my account is sitting at that. And then you're going to say, how much percent are you going to risk of your account? So let's say you are going to risk 1%. What is your risk to reward? Or is it a 1 to 1? I'm a 1 to 2.4. That's my standard system. And then it's going to say, okay, that's the entry price on that day and that time. And the rest you do not need to fill in. You simply just click OK. And now you'll see that it has literally drawn a little blue bar here for you. Okay, you can pull this out, but it is extremely sensitive and it will change the details on this. So let's go through this. It says that I've got a $45,000 trading account. I'm risking only 1% of my account, which means if the trade goes against me, I'm only losing $450. So 1% of my account is $450. That is my entry price. That is my stop loss. That is my target. And then it will spit out my lots. So I'm going to be trading on a 0.05. Now, obviously, if you are on any standard MetaTrader, there's only 3 digits you can put in. You can only put 2 digits after the comma. So you can't put in a 0.055. You can't. It's impossible to put it in. You can only put in a 0.05. So this is my suggestion to use. If you are very risk adverse, then you can put in 0.05. If you want to maybe, just maybe leverage a little bit more, then you can do 0.06. It's entirely up to you. Now, for my standard system that I'm using, my trading system, I use 10% of my account. So I go in with 10% of my account, which means now you can see it changes there. I'm using 10% of my account. It's $4,500. I will lose if it hits my my stop loss. That is my entry price. That is my stop loss price. That is my target. Now you'll see my lot is 0.55. So you can see it's just literally increased. I ignore the lot at the end, but that is pretty much the parameters. So all I can do is I can take these parameters, open up my MetaTrader, and I can input the trade there. So you guys can see, obviously, this trade has hit a stop loss. Irrelevant. That's what happens in trading. So I'll be looking towards the next trade to play out for us. But this is pretty much how a standard lot size. So this is a lot size calculator that I personally like to use. So if you want to use it, by all means, let me just show it here again. It is the lot size calculator from Mellow DIC Fish. Okay, this is my personal one that I like to use on TradingView. It's easy. It keeps my parameters in here. I absolutely love it. It's entirely up to you. But this is pretty much how it works. But now let me break down how lot sizes work and how much money you are risking per lot size. Now, on a standard, where's my writer here? So, if you are looking on a standard account, right? So, let me pull this here. If you are working on no, what am I doing here? If you're working on a standard account, standard, right? There's micro accounts, there's mini accounts, there's cent accounts. I'll explain all of them. So, you're going to have a standard account. There is a standard account. And then the other one that we have, this is where I let all my beginners start, is I let them start with a cent account. Many brokers don't offer cent accounts, but the broker that I'm with does offer cent account, and I strip away your swap fees because beginners need some time to learn. Okay, and then they can make a mistake. I'll explain to you now the difference. And then there is a cent account. So I'm going to start with a cent account, and then I'm going to compare it to the standard account because I work with the cent account a lot. So in a cent account, what it means, guys, is every single unit, not lot, every unit equals 1 cent. You do not have that with a standard account. On a standard account, it means, it means that every unit is 10 cents. Okay, now you understand why you cannot trade a standard account with $100 or $10 or $50. So these guys that are saying to you, you can trade and be successful in trading with a $10 account, I can't see it. I just can't see. You can't trade gold, first of all. You can't trade gold, but I mean, it's just too high risk. I mean, not even your lot size calculator is going to give you a lot size for that. So that's why you need to be very careful. So that means if I input 0.01 on a standard account, that means that I am risking 10 cents per unit. Now, other people know it as a pip. In our terminology, it's a pip. I prefer to it as unit. That is its official, but most of people know it as a pip. Right. Now, if it is a 0.1, that means that you are now risking. Let me just make a 0 there. So everything comes alignment. It means that you are now risking $1 per unit or per pip. Okay, so that means when it goes up 1 pip, when the price moves, you are risking $1 per unit. And then obviously, if you are on a lot size, a full lot size, then you are risking $10 per unit or per pip. So I hope this helps you to understand that when you open up a trade and you press in there 0.01 or 0.1, you're ideally telling the system that I want to buy X, I want to buy every unit at that price, which is either 10 cents, $1, or $10. But now let's take a funny one. Let's say you do a 1.58 lot size, just for argument's sake. So that means that because you've got the one in the front, it's $10, right? And then it's $5, so it's $15.80. So you are risking on this trade, because remember, you got the lot size in the beginning, which is equal to $10 per unit. Then you have fives, which is after that. So that's $15.80. 80 cents per unit or per pip. So that is how lot sizes are calculated. So on this specific one, by you using a 0.55 lot size, you are ideally, for a 0.55, you are ideally risking $5.50 per unit or pip. Okay, so that's how it works. But now, how does it work with a cent account? And this is why when you're a beginner trader, you need to start with beginner tools. You know, when you started eating, did we just give you a knife and a fork and you just started eating? No, we gave you a spoon. First, you used your hands, and then we gave you a spoon. That's how you educate. I can't understand why people get thrown onto a standard account. They've never taken a trade in their life. They blow account after account. They are shuck scared to ever get back in the market because they gave you the wrong tools from the start. Now, a cent account. Look at the difference, guys. So if you are on a 0.01, It means that you are risking 1 cent per unit, right? Or pip. If it is 0.10, then you are risking 10 cents per unit. And then if you are on a one lot size, you are risking $1 per unit. Now look at the difference. So if you have $100 in this account, look at the leverage that you have. So let's have a look at if you use that same lot size that we are using. So let's say you use a 1.58. How much money are you risking on that trade? So if it's a one, it means it's $1. So it's $1 and 50. So it's technically this is what you're risking. $1 and 58 cents. That's what you're risking. So if it hits the TP, the stop loss, you are not losing 15 point. Okay, well, that's if it moves one pip. But I mean, that's ideally. Look at the difference in risk. The accounts function exactly the same, just the amount of risk that you can take. Because a lot of people can swallow a $1.58 loss versus $15. And then let's look at this trade that this took now 0.55. It means that you are risking 0.55 cents. Oh, 0.55 cents per unit. Okay, so just look at the difference in the trade that you are taking. It's a huge difference. From a psychological perspective, it has a huge impact on your trading career. Okay, obviously, once you get to a $10,000 account, then you can't be using a cent account anymore. Then they will automatically bump you up to a standard account. Most brokers will do that. But hey, freaking hell, if you put $1,000 into a cent account, trade it all the way to $10,000, now you have technically upgraded yourself. You know how to use a standard account. By all means, go for a standard account. But I would always recommend a cent account for anybody that has under $1,000. And $1,000 is still playing it very conservative for a standard account. I will never, ever, ever, ever put anybody on a standard account that has anything less than $5,000. I will not do it because I know the risk, unless they're a very experienced trader. But I mean, if they're a very experienced trader, then they would know these things. But for a beginner, I will definitely put them onto a cent account in the beginning, and I'll get them started there because it's easier. You know, when the price is moving, it's not so difficult. But here is the beauty about a cent account. So if you do put money into a cent account, it imitates a standard account. So instead of saying 10 cents, it will write out the unit. So it imitates a $10,000 account from a financial perspective. You want to learn more about that? Join my group. I've got my free tools and stuff. Join my community. I've got a trading group, free trading group that you can join. Come and check. I put my trades in. When this trade comes out now, I'm going to be putting that trade in for everybody to see, and for other people to follow along. I do not give signals. I do not sell robots. I have an indicator that I follow, and I will input a trade. You need to know how to use a lot size calculator for your account. You need to understand everything. I just input, this is where my entry price is, this is where I'm going to get out, and this is the profit target that I'm looking for. You can follow along if you want. It's entirely up to you. I'm not here to run through with that. But this is pretty much how you need to understand a lot size calculator. You cannot, I do not begin to understand how people take trades without a lot size calculator. I don't. Because how do you even determine how much money you're going to risk? But you see, it's because we are focused on the profit. Okay, I want to make $10 on this trade. Not saying, okay, well, I want to make $10 on this trade, but I need to risk $5 or I need to risk $10 to make $10. Is that a good strategy? Maybe if your win rate is really high. My win rate, on the other hand, on my strategy, which is right here, my win rate is what? Is 41.9%. So there's no way that I can even remotely be using a 1-to-1 risk to reward ratio. There's no way. I'm not going to be profitable. I can't even use a 1 to 1.5 risk to reward ratio. I'm barely scraping by if I do use. I'm still profitable, but I'm scraping it by. I need to be using a 1 to 2.4 risk to reward ratio. That is my best metrics. And based upon my metrics here, and based on the amount of trades that I've back tested that the system has in it for me, I'm able to clearly stand here and say that I have a strong trading system. But again, I understand the strength of my account because on a $45,000 account, I can easily risk 10% per trade. But now, here is an important thing, and this is why people fail prop firm challenges. It's because they don't understand the volume indicator. Because let me use an example. I'm going to give you guys this as a bonus. So if you guys are still watching 20 minutes into the video, this is a little bit of a bonus nugget for you. So I'm going to throw in here for you guys something really cool. If you are going to be doing a prop firm challenge, this is how you work out risk. You see, because from a prop firm's perspective, they want to know that you understand risk management before anything else. Because guess what? The best traders in the world, even the guys sitting at banks, they understand the risk first. First of all, what is the risk before we look at the reward? Can we work on this reward? Now, my strategy, which I teach, if you want to get into it, get into my stuff, guys. You can come and trade my strategy with me. So if you look at my strategy, you will see that in my strategy, under my trade analysis, I have 75 winning trades and I have 104 losing trades, right? That's what I know. Now, one of the things that a lot of people don't backtest is I go and look at my list of trades. So I will go through the list of trades, all the trades, and I will analyze how many losses have I sustained. Now, my strategy, the biggest amount of losses or losing streak that I had was 5 trades in a row, literally stop loss. You see here, we had stop loss, we had stop loss, we had stop loss, good profit. I mean, just look at this risk to reward ratio. I mean, I'm risking $73 to make $200. That's like big, you know? It's really amazing. That's why I love the strategy. Um, Now, let me quickly have a look here. Yes, so I think my biggest one was 5. Now, let me explain to you why it's so important that you understand your strategy inside and out and you stick to your strategy. Is when you are looking at your strategy, I'm going to break down my strategy now. So I know that my losing streak is 5 trades. 5 trades in a row. Right. So this is how I work out my risk on my $45,000 account. So what I'm doing is I'm saying, okay, I take my $45,000 account and first of all, I go and divide it by 2 because I'm only going to use half of my account. So that means I am left. So I'm going to show you guys how I get to 10% equals. That's 22,500. Is it not? Yes. 20, that's 20, yes, 22,500. So that is the money that I'm going to be using to trade in the strategy. So then what I do is then I take my 22,500, what am I typing here? 22,500, and then I divide it amongst the amount of losers that I have. I have a 5 loser streak. So I take a 5. You can put a 6 if you want. It's entirely up to you. I can't force you to do. This is my very own one. Then I say to myself, how much does that equate to? Well, 22,500. Let me run it through my calculator here. It's too late at night for me to be even thinking about this. 22,500 divide that by 5 gives me 4,500. I just wanted to make sure. So now I know that the risk that I can take per trade is 4,500. So because it's 4,500, it means it gets to 10% of my account. And I know that I can take 20 losing trades in a row and I will still be okay with making back my wins because at the end of the day, let's look at it. This is me, guys. I've been trading for a very long time. Please, if you're a beginner, 1 to 3% of your account. Do not even go bigger than that. I would not even recommend that because I know if you look at my strategy here, you would see that I know I've been observing my biggest. Here was my biggest drawdown. My biggest drawdown. Here I had it. Was my biggest drawdowns that I had, the amount of liquidity that it, so there was a big drawdown. So I know that the risk to my account is I cannot have it less than that. I can't. I would love to leverage my account a bit stronger and make a bit more profit because the higher the lot volume, the more money I make. But I can't do it because then I'll be exposing too much money and I'm risking too much per trade, which can ideally wipe out my entire account and my portfolio. See, that's the difference. I see it as a portfolio where other people just see it as a trading account. I'm doing this for a long time. So it's very important for you to understand your winning streaks, your losing streaks. Because yeah, we had 3 losers in a row. Here we had 2 winners. And then we had, so you must now remember, for every loser that I take, so if I take 3 trades as a loser, right? If I get 1 winning trade, I win back 2 trades plus half of that trade. So I can have 3 losers and 1 winner, and my account will balance out because that's my risk to reward ratio. These are the things that I teach you in my program. This is what I teach you with my book and my course and my indicators. I teach you how to work out these things. Do you want to be a $1 million trader? Well, you got to know this. You've got to understand this. If you don't understand risk, then you are not going to succeed in trading. And this is why people don't succeed, because they don't understand the fundamental basics of trading. So, guys, I really, really hope that this gave you guys an idea of how to use a risk to reward calculator. If you want to learn more, by all means, jump onto my group. I've got an amazing Telegram group. I am going to warn you, however, my Telegram group is highly regulated. If you start posting any funny things there or any other things that you are out of my account, I block you. So that means you are not coming in again. Okay, I'm very, very strict on that, as well as any of my programs. If you've paid me for a program and you start becoming horrible, whatever, I'll give you your money back and you are more than welcome to leave. I like to have a peaceful and constructive and uplifting environment. That's how I operate. So when you come into my trading circle, that's what you're going to get from me. You're going to get 150% of my time and my effort towards it. I've built this indicator that you guys are seeing here. I've built for my community free of charge, because it is a strategy that I have worked on for over a decade, and I've had other people's input on it, and it's really performed very well. And I'm going to be using this strategy because I can be profitable for the next 50 years. And one day I can pass the strategy on to my children, and I can teach my children how to trade this thing. And if you really want to go even further, I can turn this into a personal robot that executes my trades according to my standard, because it is all about risk management and understanding the sizes of your lots. Now, before I leave, guys, in my next video, the next one, I'm going to be teaching you how to compound your account, because I think that is something that is really overlooked as well. Is people think that every single trade they take, they need to compound their money. Whoa, whoa. I'm going to break it down in the next video for you guys. So you guys that are staying here until the end, please check out the next video. I'm going to be breaking down how you actually compound your account safely and productively, where you still have enough capital to take some losses and you can still trade through them and make a huge amount of money. I'm going to point this out. I'll show you guys how I double my account every 6 months, and I do it from a safe space. Okay, so I do it from a safe. I don't over leverage my account, and I have no risk of blowing the account or going into margin calls. Okay, but I hope you guys really enjoyed this. I hope it broke it down for you. I'm sure you've got a great indicator now. If you want to learn more, jump onto my Telegram. Links are on the bottom. Check out my free indicators. I've got a whole package, the little toolkit for you to get started. And then I've obviously got my paid toolkit, which is a lot more advanced. There's a lot more modules, 38 modules, guys, 38 training sessions that teach you all of these things. And then you get to join my Telegram VIP group, where you get to chat with me directly and ask me questions. And we all trade together and try and improve the performance of what we are doing. I only trade gold, so unfortunately I don't do any others. I do, however, for my VIP community, I also trade crypto, which is Bitcoin, which is the gold of cryptocurrencies, and that's why I trade it. But I do teach some stuff there as well, how to increase the amount of Bitcoin that you're holding over the next 5 years. Because unfortunately, it is difficult to just buy a single one Bitcoin today for the everyday person. But over a 10-year period, you can accumulate a large amount of Bitcoins, trust me, by using this strategy. So, guys, I really hope this helped you and you understand it a little bit better. You understand where it comes from. If you want to check out more, jump onto my Telegram. But thank you so much for taking the time to watch the video. I really hoped it helped you. If you do have any questions, please pop them in the comment section. Maybe something you want me to cover in the next video, pop it in there. I would love to make a video about it. If I don't know, I'm going to go find someone. I've got lots of mentors. Go find someone that can help us with this. Other than that, guys, thank you so much for being here, and I'll see you guys in the next video. Happy trading.